All right, let's get more perspective on these markets as we're now less than 24 hours away from the latest Fed decision. I want to welcome in Kevin Mahn, Hennion and Walsh CIO. Kevin, always great to have you on the show. Let's start right there, Kevin. Listen, Fed decision on deck. They want to know, Kevin, are we going to get the normal tried and true 25, or we're going to get the supersized 50? Kevin, what are you looking for?
I think we get 25 basis points. But with that said, I do believe they should have cut already back in July. And this would represent the second 25 basis point cut, which would lead us to 50 basis points. In fact, I believe in all likelihood, we revert back to their dot plot chart that we saw coming into 2024, which showed 3 rate cuts of 25 basis points each this year. Still 3 remaining meetings. We can still get those. 3 rate cuts of 25 basis points next year, and yet another 3 rate cuts of 25 basis points in 2026. Add it all up, we're 225 basis points lower by the end of 2026, and we get back down to a rate of between 3 and 3.25%.
And Kevin, there's all this debate about 25 or 50, right? And I think some might argue maybe that's a little bit short term and what it's going to mean for the markets. For a longer term investor, what should they be listening for tomorrow? What's going to be perhaps the broader takeaway once Powell starts speaking?
Really, how much damage has been done to the economy with the 525 basis points in rate hikes that have already taken place? If you look out a little bit further, I think it's clear, at least to the 3 of us, that rates are going to be lower, yields are going to be lower, and inflation is going to be lower over the course of the next 2 years. If investors have that mindset in that time frame, there's tremendous opportunities in both stocks and bonds. But if you try and play the Fed guessing game, is it 25? Is it 50? Are they going to cut 3 times this year? We don't know. We don't have a crystal ball. But if we look out further, the picture becomes a lot clearer.
Kevin, if the target is to get back to a 3 handle, why not just then start with 50 tomorrow? Get more aggressive, go big, get there faster.
Everything we've heard from Chair Powell is that they want to be gradual and they want to be transparent with respect to the pace of these interest rate cuts. In fact, if we get those 3 rate cuts of 25 basis points this year, interest rates will still be at a 17-year high. Not as high as they were, a 22-year high, but still high. I think they become more gradual after that, perhaps just a quarterly 25 basis point cut next year, 4 of them next year, and then 2 in the following years. But we're going to learn a lot more from the Fed coming out of this meeting because we get an updated summary of economic projections and an updated dot plot chart.
Kevin, I want to pull up a chart for you. It's from Bank of America's Fund Managers Survey out this morning, and they had nearly 80% of respondents say that they feel like the global economy is headed for a soft landing in the next 12 months. That was the best reading we've seen going back to May 2023. And I think when you just look at the market moves over the last month, I've sort of been wondering, is the market almost priced too perfectly for a soft landing heading into this meeting, given that we're debating back and forth about whether or not they're going to be able to pull it off?
Yeah, I think if you include the Federal Reserve in that survey, that number would have actually been lower. Why do I say that? I looked to their last summary of economic projections, where they were forecasting economic growth to stay around 2% for the next 2.5 years. They're not forecasting their core inflation number, which we know is PCE, to get back to their target 2% until the end of 2026. Yet they're forecasting 225 basis points in cuts prior to getting back to their inflation target of 2% by the end of 2026. What gives? I think, Josh, they're more concerned with the threat of a hard landing than they are with inflation staying above 2%.
Do you think, Kevin, politics plays any role in this decision? I know that Jay Powell will hammer the table, the Fed's apolitical, but he has to know he does 50, there would be real political blowback on that.
And we also know that there are certain senators asking him to do even more. So there certainly are political pressures right here. But I think he has enough data, if they are data dependent, to support actually starting to ease with respect to interest rate. And we're going to see a gradual easing program over the next 2+ years.